There are some major disturbances and fluctuations in the financial markets right now today. In fact, what's happening has never occurred before in history. The very first thing I want to look at is debt. And I'm going to talk about this on various levels. You look at the debt on personal levels of credit cards and other financial products, and you see that to be extreme today, but it's only one aspect. The second thing I want to cover is the big changes that are occurring. And the third is preparation. What's being done right now by some people and others, unfortunately, not going in the right direction. I've got a lot of information. You don't want to miss it. Let's begin. Are you interested in the information surrounding debt? Well, just look at these numbers. High inflation and rising interest rates mean holiday shoppers who turn to credit cards and other methods of borrowing are left with bigger balances this year. Slightly more than a third, or 35% of shoppers took on debt this holiday season, down from 36% last year. But the average debt borrowers took on that climbed to $1,500 in 2022. That's a 24% increase. Most people, 63% who took on debt, were not planning to do so. That's up from 54% last year. Look, you're talking about 37% of shoppers will take 5 months or longer to pay off those balances. And you see that these numbers have all increased. What's the deal here? Why is this happening? Well, of course, they can't pay it because the interest rates are higher, because things are more expensive, because their job situation isn't as good as it was previously. They are holding a balance, and that balance is being charged, depending on the card, 19+%. Imagine how long it takes to pay off some simple items if you're paying 19% interest on top of all that. These credit card companies know what they're doing, and if you're not paying that off at the end of the month, they're just raking it in. And it's not just the credit card companies. Other businesses are doing this too. You got the buy now, pay later. Get that dopamine hit, and then you can figure it out later. Get that fix, figure it out later. Is that really what we want to do? No, we want to, obviously, dire straits, you do what you got to do, but we don't want to get into that bad debt. Look what's happening. Big growth in electric heat set the stage for blackouts in the U.S. South. Electric heat in Tennessee, Carolina surged 20% in 10 years. Outages expose challenged grids likely will confront more often. People are not understanding the fact that the grid cannot support our energy usage, and they are pushing the whole, if you look at the West anyway, pushing the whole West into this, all the renewable energy, regardless if it's ready or not. I'm not saying anything about what my opinion is on that. I'm simply saying it's not ready to go. And they are essentially saying, look, you want to do coal, you want to do natural gas, you want to do oil, we're going to make it extremely expensive for you, and we're going to make it more difficult for you with regulations. So these companies are saying, you know what, forget it. I'm not going to drill. Why? Why would I? There's no incentive anymore. I'll go put some solar panels somewhere and I'll make more money. Well, that's the way it's working, right? And a lot of these businesses are just not expanding. That's what's also occurring. So for the people, they're simply paying a higher price. And you add that on top of all the debt, you add that on top of everything else, it's not so good. One of those aspects is, I know you know it, rent and mortgages. Housing costs are just through the roof, and right now Miami is the least affordable housing market in the United States. You could look at the others, which, those are the ones you would obviously think of, the 5 least affordable housing markets in the US, Miami on top of the list, and LA, New York, Newark, New Jersey, and in Florida as well. Another place that, there's actually several of these that have started to pop up in Florida from what I've noticed, because some of them are, they just don't have the income to support. This isn't San Francisco or New York, you're in Manhattan, expensive place, but you might be getting a high wage. That's not the case for a lot of these places, and Miami happens to be one of those. And if you're not prepared for this, if you don't understand what's happening in relation to debt, well then you might be burdened by it. Let me explain. When debt is rising very quickly and interest rates are rising at the same time, it can create a challenging situation for individuals and businesses. As the cost of borrowing money increases, it can become more difficult to afford the payments on existing debts. This can lead to defaults and bankruptcies, which can have a negative impact on the economy. If rent and housing costs are also rising very quickly, it can further exacerbate the situation by making it more difficult for people to afford basic necessities like housing. This can lead to an increase in homelessness and housing insecurity, which can have a negative consequence for both individuals and the economy as a whole. To make things more affordable in this situation, governments would try to stabilize or reduce interest rates. This could be done through monetary policy, such as adjusting the interest rate that the central bank charges for lending to commercial banks. Finally, governments will likely address rising housing costs by increasing the supply of affordable housing and provide financial assistance to help people afford rent. This could involve measures such as building more affordable housing units, offering rental subsidies, or providing tax credits for people who are struggling to afford housing. It depends on what the governments want to do, but ultimately they don't want to change the situation and address why there was a bubble in the first place. That's the situation that people don't want to talk about. Now, let's look at this. China reopening earlier than expected could hit supply chains in the short term, but boost growth in 2023. So it all depends on what you look at here and how far you want to move out into the future. But I am seeing China reopening at the same time. They're saying, oh my goodness, the infections are rising. This is a terrible idea. Why did they reopen? And all of these things that you're probably seeing in the news as well. Well, I think if you look at what's happening with the supply chains, number one, China will be shutting down for a few weeks towards the end of January. That's important, okay? Because the entire thing shuts down. The ports aren't moving, the ships aren't leaving. This greatly affects what's happening with the supply chains. So depending on what we see in that regard with the infections and all these different things, are they going to go into lockdown when they come back? That's key, okay? Because if you remember specifically in 2020, when they were supposed to come back from their New Year, Chinese New Year, they didn't right away, and they started to extend that. And it got extended by, let's say, a week or so, at least in my case, with what my dealings. If you look at this, going a little further in some places, and then the ports started shutting down, like all these different things happened. But it started from the New Year. So this could be a repeat of that. So keep a close eye. Do you want to know about this? Are you interested in what's happening with the supply chain and everything else? Hit that subscribe. Tomorrow, I'll bring you some more info, okay? I'm talking about oil. I'm talking about all kinds of things in that video. Look here. You can see recent weakness has come as production halt. This is talking about basically what's going on with Apple, okay? Come as production halts in a major iPhone plant in China contribute to a shortfall of Apple's flagship product. JP Morgan wrote that iPhone supply is improving and inching towards parity with demand. Apple typically much further along in reaching parity between Apple supply and demand at this time in the year. This is the problem, right? Right around now, who knows what's going to happen later, but if you're shutting down for 3 weeks and it's potentially going to be extended, well, then what happens to your supply? They're trying to diversify that by going to Vietnam, by going to India. That is extremely small percentage in compared with the rest. So watch what happens directly with Apple. You're an investor in Apple? Maybe you're an investor in an S&P 500, index fund, other index funds, let's just say. You're going to be affected by this, aren't you? Okay, so pay attention. The reason I mention this stuff is so that you can take the data from it. If you're an Apple investor, that was for you. If not, it's still for you because it talks about the supply chain and how you'll be affected. European natural gas prices return to pre-Ukraine war levels. So this is a good piece of information. Natural gas was, it was skyrocketing. The fact that it's back to this level during this time of year, to me, is surprising. Because usually it would be elevated regardless, higher demand during the wintertime, but it has come back down. A lot of what happens on the way up and the way down, just like with lumber prices, if you remember, is speculation. Don't think it's all this and that. It's speculation, a lot of it. I don't have a percentage. There's no way to calculate that. but know that this happens a lot with commodities. And even the price of plastic. If you are involved in plastics at all or manufacturing at all, this is interesting, but maybe that's only for people like me, why plastic is interesting. Why the price of plastic is crashing at a record surge, an underappreciated source of inflation. If you remember what occurred back in 2020, this was an interesting one because if you were making products with plastic, especially with like the hand sanitizers, well, those were such hot demand items at that time. And in fact, you might have incurred this as well if you noticed a lot of the small hand sanitizers became unavailable. And then, the price gouging happened and all these different things. But the bigger jugs of the stuff, like the gallon size, were available. Why? Because the plastic that was used to make that, all of those ingredients, everything that went into it was simply out of order. They couldn't manufacture it. Then those raw materials were much more expensive and were difficult to come by and so on. So that's happening, and now it has reversed considerably right here and now today. So just something interesting to pay attention to, okay? Because it's not always so black and white of, oh, they're price gouging. Well, a lot of that, and I know this from Kevin King. Kevin King is just a source, very good source of products. Anyway, what we see here is that the price of the bottles had gone up substantially. So it wasn't a lot of price gouging, although there was. But that happens. This is talking about the US dollar, and the only point that I wanted to make from this was that the dollar, as of December 28th, the dollar has risen 8.9% this year, and it just shows you tracking against the other currencies. However, it depends. If you look at the stock market and dollar relation, a lot of times, let's just take it back, when we saw the stock market performing poorly, the dollar was rising. So there's a direct correlation between these two. And I just wanted to mention that right now because it's kind of in flux and they're considering that this has now reversed in the opposite direction where we would see the dollar start to lose out against other currencies. I'm just paying attention to it. And then the biggest bet against the US dollar, gold. Well, who's buying it? Well, the physical gold is being bought up like crazy. As always, gold buyers binge on biggest volumes for 55 years. China and Russia have been large accumulators of the precious metal in 2022. I just wanted to note this because at a time in which the dollar is going in one direction, other central banks are saying, I'm not going to buy up more of the dollar. I might buy some gold because we're sanctioned. We can't do business like this. We got all these things to worry about, right? And then the last point I wanted to make, Generac, shout outs to Sean if you're watching. Stock leads S&P 500 gainers after Jenny says buy, citing free option on clean energy. There's a lot of talk about what is considered clean energy and what energy we should be investing in the future and so on. But this is one that I thought was important because a lot of people are putting these into their homes, and they generally only do so after a crisis, by the way. But it's worth paying attention to. If you want to prepare, if you want to be able to deal with the crisis, you need to have your energy situation in order. I talked about it at the beginning. I'm bringing it to you back right here at the end. Whether it's, you have to decide on what's best for you, okay? Some sort of backup. It's so key. Winter storms put the US power grid to the test, and it failed. And this is the whole point. I wanted to finish off with this, just telling you that you must be prepared. This right here, okay? We're talking about preparation, we're talking about income, and if you're not aware of these things, you gotta get your stuff in order. Really, right now, today, don't delay. Have the preparations in place. Try to get out from that bad debt if at all possible. Did you find this video informative? If you did, hit that subscribe button down below. It's near the like button. I'll see you tomorrow.